following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. At the break, we're going to have our special guest is Bill Meridian from Cycles Research. He's got some things to share with us, and he is going to absolutely blow you away with this website that he showed me yesterday that shows how they track the hacking that goes on across the globe and where it comes from. It's just it's really amazing. So we'll cover that at the half hour, but first we'll get into some of the markets. We are first starting to take a look at the euro here. We're in the midst of a 6-day rally here, a 3-day rally in the euro. We're approaching the 61% retracement up here at 112.38. Those of you that follow the news realize that Greece has made a proposal to let them borrow another $53 billion in the hope that they will pay their remaining money back, and that Mr. Prime Minister Tsipras basically took away everything that they voted for in the referendum and went exactly against what the Greek people voted for, and that is he also recommended some austerity. And he also recommended a VAT tax, which they voted that down from what I understood, but that just remains to be seen. So this is what we have going on in the euro right now. And the other thing is it's really safe to buy China now, folks, because Goldman Sachs came out yesterday and said it was safe to buy China, that they were looking for a 27% rally in the next 12 months. And I had to do the math on that because it was up 5% yesterday and 5% today. That's 10%. That means on Wednesday he would make his 27%. Quite strange. The key that I'm watching, of course, will be the FXI. We'll be watching that very, very closely. As a matter of fact, since we're limited with time today with Bill coming on, and we certainly don't want to miss anything that he's got for us because he's a really smart dude and has really got some really interesting things to look at here. We'll take a quick look at the Chinese market here, and we'll see what's happening. We know we've had a big break. The Chinese have lost over $3 billion in the stock market. They said it was somewhere between 3 and 4 trillion. That's T with a trillion, and Greece is asking for 53 billion. Do you see the difference between 3 trillion and 53 billion? What the importance might be? That's where I think the smokescreen is, folks. But who knows? We'll have to wait and see. Okay, here's what we've had. We've had the market break down badly, down to the 61% retracement of the whole move. We had a rally back yesterday. We should have a rally back today. And we should have some really strong resistance where that 20-minute line comes in. You'll see that trend line that comes in where the 786 formed back in February. And we gapped above that. Now we've come back below it. And now we're going to probably rally up into that around 43. Well, if it's up 5% today, that would take you 5% of 40 would take you right up into that 43 area. So that's going to be a really key area to walk. But remember, this is just a half rally in the Chinese market because they're only half the issues are open. They allowed another 70 issues to be traded yesterday. Now, this morning on Bloomberg, they had the former Prime Minister of Australia on. I can't remember the dude's name, but he was very, very scholarly and very smart. And he said this Chinese thing doesn't mean anything at all, that the Chinese government is going to control it, and there's nothing else anybody can do about it, that it's pretty much a done deal, and there's nothing really to worry about it, that they'll muster all of their resources to make this thing work, is basically what he said. And I guess that must be the way it's going to be. So we'll wait and see if we see technical analysis work, but that's what this gentleman said, and so we'll have to wait and see if this is going to be the case. Now, I wanted to show you what I see in the market and for what it's worth, but this is what's happened over the last since in the last week or so. I'm going to put this in here and let you take a look at it. You make your own decisions, of course, but we're going to look at the S&P 500 here. We had the gap down on right after the holiday in July 4th. We gapped down on that on the 5th. And as you can see, we had an up and down since the 5th, which is 5 days ago. We've basically gone nowhere. Now, there's a possibility of a big ABCD coming in up around the 2085 level into that gap area where we came down. That's certainly a possibility. And we're going to be 200 points higher in the Dow this morning, which each time people have done that over the last 4 days, it's not been a very smart thing to do. But today will probably be the smart thing to do, and the Dow could probably be up 400 and all this good news. We don't know, but that's just what they're showing. That's what they're showing. This is a very meager rally compared to some of the other markets. Let me give you an example of what's happened in the DAX. This is the German version of the S&P. It's traded very heavily across Europe. In fact, it's the favorite thing for them to trade. And I wanted to just give you an idea of what's happening here, and you'll be able to see it real clearly. And then we'll just chat about it as we get the charts up here a little bit. Now, this is the German DAX going back since it made its high several months ago in April, right around April the 10th. And as you'll notice, those black lines that you'll see, those were the equal rallies that we've had over the past times that the market's rallied. And you'll see some gaps in here. We gapped down over that end of June. We went down and made a lower low by a little bit. And if we compare what the market's doing, and if it's going to do the same thing that it did before, you'll see, and I will bring this up for you so you can see it again, that the next rally would take us right up to the 786 of this move, and that would be right into the gap area that we have. So we have a situation where all this news is coming out and looks really good, and the fact that China is free and clear, and the rest of the world is free and clear, mainly because of this thing that's happened in Greece with their proposal. They basically went to the creditors and said, this is what we're going to do, and whether the creditors do anything or not, remains to be seen. They're between a rock and a hard place because, Greece cannot pay them. So that's that's pretty much, the bottom line of, what we're looking at. Okay, now we have a situation that we talked about yesterday in crude oil. I wanted to mention that because we've had some interesting things happen overnight. We've also, if you remember, when crude oil started down, it would have these 3- and 4-day rallies that would last about $3 to $4 a barrel. Well, since July the 7th, we've had 2 ABCD patterns form up here at that 53.88 level, and that has been 330 points, 330. Let's try it again. 330 points rally from the bottom. So if that's correct, we should have some strong resistance up here at that 53.85 in crude oil. We had the same thing happen in gasoline, and gasoline is much weaker than crude oil. Of course, that's unseasonally because it should be the strongest during the summertime. But we've actually down on the day on gasoline, whereas we're still up just a little bit in the crude oil on the day. So that's what we're keeping an eye on the oil for that thing. Now, gold and silver, they have moved a little bit, but not very much off the bottom. I will put the silver chart up because I think that's an interesting one to look at just from a technical point of view, just looking at these different charts that we watch. And I want to be able to show you what I think is occurring in these metals, but we'll see if I'm correct or not. Well, we got, I'll just go through with you this one thing here on the, okay, this show, better put the chart in there first. Come on, you little rascal. There you go. Okay, this is silver chart. You can see the first 20-man line that came in where it was around $16 an ounce. That was the first 20-man line where it says this should now bring resistance. And now we've got that same line coming in at around the 1560 level in the Treasury. Oh gosh, in the silver at the same time. That would be taking out the highs of the last few days and going up to 1560. Now, if we get much above 1580, this would tell us that there's something really wrong with this technical pattern, and we could go a lot higher. But frankly, this is what we're looking at right now, is nothing more than a bear market rally from July 7th through the 10th. And we have a pretty significant astro date to date. It'll be finishing, of course, by over the weekend. So when we come in Monday, it's going to be, it might be a real game changer, folks. These markets just might, because the stock market didn't sell off very much, I could be totally wrong, and this thing could just take off, one more time. But boy, the advanced decline lines and all the other stuff that I look at, the internals of the market are so negative that it's just terrible. And when you look at the transportation index and some of the other things, it's just really a negative picture. And I guess I'm the only one that can see it because nobody else sees it. But, that's just me. So who knows? Anyway, if we gap up big on Monday, then that'll be have to go in and put the application into McDonald's, I guess, because I will be short over the weekend, and we'll see what happens here. Okay, now we're going to talk about the Treasury bonds and also the German Bund, because that's a very big thing that's been trading, and we'll put the German Bund up here, and we'll look at it first, and then we're going to have a break coming up pretty soon, and then we're going to have Bill Meridian on at the half hour. And that will really be good. But you'll see here what's happening with the Bund. It's really breaking badly now, and we are coming down quite rapidly, which we expected, because interest rates are going higher. They're not going lower. And as you can see here, we have a monster ABCD pattern over the last 3 weeks that finishes down around the 146 level. That's 5 handles from where we are. Well, we've come down 3.5 handles just in 3 days. So, that doesn't take long, for it to get to that point. But we do have a, higher interest rates. I mean, Janet Yellen and the Fed have not done anything as of yet, but this is what we're looking at here as far as, where we are with interest rates. They certainly look like they want to go higher. We'll look at the same thing in the Treasury bond, and if you'll give me 1 second, I will have that for us. And that is right here. You'll see the same thing in the Treasury bond that we had happen. We'll take a little break here, and then we'll be right back after these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I posted the chart of the Treasury notes also into the Tiger TV, and you'll be able to see that it's also in the same type of a downtrend that we have going on in the Bund and in the Treasury bonds. That tells us that rates are going higher, whether it's related to anything that's going on in the rest of the world. I'm not really sure, but we'll have to wait and see. Now, we've had a request to take a look at Apple. Apple's been under a little pressure the last few days, and as you can see, we finally broke down below the 382 retracement. That was in the midst of a 250-point rally in the Dow yesterday. In the first part of the day, Apple kept breaking. Now it snapped back a little bit. It's up a couple of dollars from yesterday's low, but that's the same thing that it did on Thursday. So just be really careful here with Apple, folks. It's better to buy it here at 121 than it was at 133. That's basically it. But we had very little volatility in the Apple, so this stock is still in a really long-term uptrend, and whether that remains to be seen, how long it's going to be, I don't really know. Now, we're going to have Bill coming on pretty soon here, so I wanted to just go over what I think is really important, and that is this New York Stock Exchange Index chart. We went down and we've tested the 1.618 expansion of the low from June, which was a major cycle low, and we could easily rally up into that zone another 3% or more, 4%, up to the 10,964 level, which would be into that gap at the 61% retracement. We could do that. The internals of the market would have to change a great deal, but if everybody thinks that everything's okay in China and the rest of the world believes everything's okay with Greece, then there's probably enough. And the market is oversold because we've been down, since May 19th. We could easily have a pretty good rally. But the internals of the market don't really support that. That's basically the way I'm reading it technically. And that's all it is, folks. It's just a technical read. I am not a person that spends a lot of time with the fundamentals. In fact, a little less than zero, as they say in the trade. Okay, now the next thing we're going to take a look at here is the VIX index, because that was very interesting here, because the market actually, with all the markets selling off yesterday, there was someone taking protection in the VIX. I don't think there's any mystery to that, but you'll see that after opening lower, the VIX rallied all day to take out last week's high, and of course today it's going to open lower too, because we got the Dow going to open another 200 points lower. 200 and it looks like 200 points higher, at least 200 points higher on the open. And we'll see if the continues to go up. The people that didn't buy it yesterday when it was going down, now they want to pay up for it. Boy, that sounds like a pretty smart idea. So we'll wait and see. The target on this VIX actually is up around 23, but I'm looking for a VIX somewhere around 60 or 70 sometime in the summertime, late August maybe, if I'm right about this. If I'm wrong, so be it. Move on to the next one, and we'll wait and see, what's going on with these other markets. But right now, that's the way it looks from me. We've had a very, very minor rally here in these stocks from the U.S. point of view, and of course, we've had a big rally in Europe, but the U.S. has not been really rallied very much, and that's the largest market in the world is the NASDAQ and the Dow Jones, and then the third one is China, Shanghai. Fourth one is Japan, which has done the same thing. Japan was down slightly today. Hong Kong was up 4%, but that's been under a great deal of pressure also. So I don't think what China is doing is going to make much difference. Well, I think it's going to make a lot of difference, because I think they're in a major. I think they're in the first Great Depression. If you want to put my feet to the fire, if you look at all the commodity prices that are going down, rubber, steel, copper, tin, coal, everything. There was a gentleman on Bloomberg yesterday, an economist from China, trained at Oxford, and he said the key was that the electricity usage in China has been going down steadily for the past 18 months. He said there's just been a lack of activity, and luxury car sales have dropped in half over the last 7 months. And if you'll notice the price of Win stock, it has dropped in half from 250 to 105, got down to 92 at one time, and that's because the Chinese government only allows people to go to Macau to gamble twice a month, as opposed to unlimited that it used to be. So we'll see what happens. Okay, we're going to take a break here, and then we're going to have Bill Meridian on from Cycles Research out of Vienna, Austria, right after the market opens, and we'll be talking to you soon.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're on with Bill Meridian in Vienna, Austria. Bill, are you there?
Yeah, I'm here.
Hey, buddy, I messed up. I had to reboot my computer, and when I did that, my Skype stuff that you sent me yesterday was lost. So, do you have time maybe to come on Monday at 9:30, and today we'll just chat for a little bit? I wanted to. Do you have time to do that? Either Monday, Tuesday, Wednesday, Thursday, or Friday? I could have you on.
Well, it's no on Monday. I know that.
It's a no on Monday. How about Tuesday?
Yeah, but I have found the graphs.
Oh, you did? Okay.
I am trying to send them to you.
Okay. Well, if
but
they come
caught me completely by surprise here.
Well, it caught me by surprise too.
Not.
Uh-oh. I think we've lost him.
No, I have to concentrate in order to find them, and I have just sent them
Okay.
Again,
let
by
me see.
email.
Okay, by email. All right. And I will do my best to pull those up, and we'll see if we can find those. Give me 1 second. And all right, give me a second here. Bill, tell the folks what you showed me yesterday about the hacking map that I found so very interesting. That's the main reason that I wanted to have you on the show today, was the hacking map, because it was so spectacular. Do you want to tell them what site that is and what it's telling people? Uh-oh, lost. It's well, we've lost connection. What am I going to do? I don't know what's happening here, so we'll just not worry. We lost Bill for the moment, so folks, I apologize. You know, most of the time I try to get this stuff as near technical as I can, but we'll wait and see, and we'll just have him on again when we can. But he has a website that you can go to. It's NORSE Core, CORPSE. And it shows the tracking, the hacking that goes on in the world. It's really spectacular. It's like watching a giant video game, and it's really spectacular on what it's doing here. Now we got the stock market. Dow's up Dow's are going to be up 200 points here. It looks like on the opening, like it's done many times before, and we could be headed up into one of these spectacular days to the upside. Whether that's going to happen or not, we'll be able to see here very shortly. So I think we've got Bill back. Are you there, my friend?
I'm right here, yeah.
Okay, I haven't got the email yet. Hopefully that we weren't hacked as we were talking about this. Tell the folks about this website, Bill, and what it does, because
Norse Corp is a cybersecurity company. They set up what are called honeypots. A honeypot is a simulation of a real database. So, for example, if AT&T hires them, they will set up on the web what appears to be, to a hacker, an ATT database. And they do this intentionally to collect information. They want to know where the cyber attacks are coming from. They will get the IP address of the attacking computer, and they will also determine what type of an attack it is. And this helps them develop a profile of where the attacks come from, what type they are, what the company needs to defend against. And they have the Norse Corp attack map. And as Larry
I posted that into the room. I posted that in the room so the folks can see it, but it's live when you're watching on the internet. It's really spectacular.
It is live. It looks like a video game, and you see little streaks of colored light shooting across the globe, but most of them derive in China. And, of course, one of my friends said, you don't see anything coming from the United States. I said, well, of course, an American company is not going to reveal what the U.S. government is doing in return. Mm-hmm. So it shows attacks. Most of them come into St. Louis, and a lot come into Microsoft. Now you can see it all on the map.
Okay, which chart would you like to start with? You want to start with the Wheeler cycle?
Yeah, that would be fine.
Okay, let's start with that one, and just tell us what you're...
Let me explain. Bill. There are a number of different. It is my contention that we can take more things. We can take other data rather than prices, and we can you can accumulate the data. And as a friend of mine over here in Budapest says, at least that will give you some idea what the distribution is. Like one time I did a study of assassinations, and most assassinations for some reason occur in the month of September. I have no idea why, but. Wheeler's War Cycle, or Wheeler's Index of Battles, was created by Professor Raymond Wheeler at the University of Kansas. I think it was back in the 50s. He took his graduate students, he gave them a complex formula to determine an index number for a battle. So, in other words, the problem you arrive at is there are lots and lots of small wars. And then, of course, as a friend of mine found out in Amsterdam, 90% of all casualties have occurred in World Wars I and II. So if you weight it by the number of casualties, so Wheeler weighted it by the number of casualties in relation to the population and the amount of collateral damage done. It is a complex formula, and they ran it from BC times right up till 1990. 1990 was the last time anybody tried to update it, which does not invalidate its use. If you have that much data and you're projecting out into the future, it's still a valid cycle. And in 2007, 2008, I was in touch with my military friends, and they were telling me the U.S. was being victorious in Iraq despite what you saw in the very biased media. And of course, that is when Wheeler's cycle topped. The most dominant cycle is 18 years, as you can see in the upper left-hand corner. And then I was going to write a peak in the war cycle in 2007-8. I never got around to it. So now I guess I can write a trough in the war cycle, because you'll notice it has bottomed. And where I wrote decreasing tendency toward war, that is where the previous side got so badly kicked in the last war that they essentially lose their will to fight. They lose their morale. And I can tell you why that is. They've developed, the common notion of city war is Stalingrad, where you lure the tanks into close combat and you blow them up. The Israelis have developed a device that detects body heat through walls. They've also got a gun that fires at a 90-degree angle. I've seen it in the defense magazines. You just stick it around a corner. The other guy can't see you. You can see him, and you can fire at him. They have developed small diameter bombs, SDBs. They initially started packing the bomb with concrete dust, but that muffled the blast. And they've greatly refined that. And even now, mortar shells and artillery shells are GPS tracked, so you can lay it right on somebody's head. And as a result, the collateral damage is minimized. And as a result of that, the spider units, which gather intelligence in Iraq, the people were very happy to say, the bad guys are over there in the next block, because they knew they weren't going to get hit. And I could go on. And I said to Jim Dunnigan, my friend who writes all the military books, I said, Jim, do you see the parallel? Now, in World War I, we had spotting planes, and initially they opposing sides waved at each other. Then they started to shoot each other with 45s. Then they started to throw bombs. 1914 through 1918. I said, now you have drones which go up and they just see what's going on in the battlefield. Then they get armed. Then you created the Predator and then the Reaper. And the Reaper is 25% of the cost of a fighter, and you don't need a pilot. You need an operator. And so you're not risking anybody's life. And so we're getting now into Star Wars, where you have clone and mechanical man armies, and nobody can fight against this. I mean, in 2008, an armored vehicle used to, our view is the Panzer leader with his head popped out. You shoot him, and you throw a grenade in the top of the tank. Well, the armored vehicles in Iraq, they have sensors, and if you shoot at it, the computer immediately detects the shooter and zeroes in and throws a fusillade of shells at him, and he's dead. I mean, all you have to do is shoot at it. If you hit it, you can't do any damage anyway. Mm-hmm. So this, up in 08, had broken the morale, and I said in 08 to my friend Jim, I said, this means the United States is going to greatly cut back on its defensive spending, or it's just going to lose its will to use its power. And the first thing that will happen is people will start creating their own drones, which is fairly easy. And then they'll start to arm them. And then slowly the advantage that the victor has at the last peak starts to erode. And when you get to the bottom, where you are now, look what's happening with rioting, police shootings, and ISIL acting up everywhere. It's because they don't detect that anybody's going to try to stop them. So at the moment, you're in a bottom for the war cycle, and the answer to the question is it'll probably get worse from here. As a result of this, I use this as one of my arguments. The sale of the largest type bullion bars that only the wealthiest people can afford are off the scale. And I just noted in my last report that the people who build safe rooms can't keep up with the demand in New York City. So does that tell you why the dollar is strong? I'm using all this as reasons why the dollar is strong. When things get bad, the U.S. is the least worst place to be.
Mm-hmm. Okay, Bill, I have a question here about the panic cycle that you brought to us last month when you were on, and certainly we've had a panic going on in China and mini panic in some of the other countries. We haven't done too much here, but how do you view this panic cycle that you talked about, this July area? Because we're coming into July 15th is going to be just a few days away.
Well, first, the next slide is the Norse slide, so we'll skip through that one, and we'll go to the panic cycle. Yeah, we'll skip through that one. Yeah, we went to the panic one. Yeah, that's the third one, huh? I've already put the Norse slide in, Well, the panic cycle starts in 1600. I just coded all months as 1, which is a normal month, or 2 is a panic month. Now, when I update it, I have to make a 2 for June because the Chinese slide constitutes a panic in the definitions I've set up. So, I would say I don't think Greece is going to leave the Eurozone. I'm looking at the book in my bookshelf, The Great Deception by Booker and North, which will tell you how they cobble this together. It's all it's based on political control, not creating any economic stability or benefit for anybody. So they're not going to let them leave the way Washington would not let the South secede in 1860-61. So I don't think they're leaving. I just think they're going to be beaten up sufficiently to show people what happens if you leave, and I think they'll create Eurozone and Eurozone Light, and which means that's what they did in Cyprus. I mean, you have the euro, but you can't take so much out of the bank. You can't necessarily exchange it. So I don't think they're leaving. So that's why I've been saying since March, the panic cycle peaked. It's sliding and it's coming down. Now it's bottoming here in July. It pops up slightly. And I think they've papered everything. They'll paper everything over, which is, if you read the history, this is what they always do. And it takes a certain amount of time for people to get their confidence back and to start taking risk again. And so I don't think really there's too much to be concerned about. I don't think the Chinese, the decline in the market is really, to me, doesn't constitute a panic. I'll put it into my panic cycle because that's the definition is if you get a slide of more than 15% in 31 calendar days, I have to count that as a panic month. Mm-hmm. So I think we're at sort of a low or a lull here. I think people are going to breathe a sigh of relief over Greece, and it's going to be back to normal, and then the risks will start increasing beginning next year.
Okay, now the next chart that we have is the Chapwood Index.
Oh, yeah, well, again, this goes back to the Business Activity Index where I did a projection about, 15 to 20 years ago, and it showed a peak in 07-08. Then the index came straight down. Then it stayed flat. And when it stayed flat, people were saying, young man, why would the economy not recover? I said, well, because they'll elect a government that is not friendly toward free enterprise. They'll start to heap on rules, regulations, and taxes. And people would argue with me and say, well, it's really not that bad. And I think we did this last time. Unemployment is falling. And if you go to Shadow Stats, John Williams, and you look at his unemployment graph, if you use the definition that the Department of Commerce used for unemployment during the Clinton administration, that same definition shows that unemployment in the U.S. is 23%, which is depression levels. And so that's my answer. And then people would say inflation is subdued. Well, here, according to the Chapwood Index, it reflects the true cost of living in America. Updated and released twice a year, it reports the unadjusted actual cost and price fluctuations of the top 500 items on which Americans spend their after-tax dollars in the 50 largest cities in the nation. And if you look at it, 2011, 9.9% versus the official CPI of 3%. 2012, 10.7% versus 1.7% according to the CPI. Then it goes 10.2, 9.7. Cumulative 47.1% since 2011 versus 7.2% for the CPI. And if you understand, if they take GDP and they deflate it, if you deflate it, then real GDP in 11 was minus 6.2%. 2012, minus 6.5%. 2013, minus 6.5%. 2014, minus 4.1%. So my point in bringing this and the unemployment numbers up is that Austrian economics works. The cycle I'm citing works, but you have to be looking at the right numbers.
Wow, Bill, you're one smart puppy. Okay, let's go on to the next one here. That would be the airline.
This is falls. I threw this in. I didn't know how much time we'd have or what we'd be talking about.
This is the airline distribution planets, right? Is that the one you want to watch?
Do we have an ad coming in here?
We got an ad coming in here. What would be the next two that would be the best, Bill, that you would like to do?
Well, this one and the next one.
The airline distribution
chart? Let's stick with that. Yeah.
Okay. All right. That sounds good.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we'll have Bill back on the show in a few weeks. But unfortunately, we did get some of the charts done. He's just a very, very smart fellow to have around. And if you have interest in cycle research and stuff, it's www.cyclesresearch.com out of Vienna, Austria. And he has a handle on oil supply and gold and stuff like that. He's been in business for, well, we're the same age, so he's been around as long as I have. And he's a master astrologer besides that. So that's the important thing. The website that he was talking about is, I'll put this in here, it's Norse Corp, NORSECORP.com, and that shows you where the hacking starts. You'll see it all across from Libya. It's quite heavy. and also from China, of course, is the big one. And, but that's basically, what we're looking at here when we're watching some of these things. So keep in mind. Now, we've got the weekend coming here. Well, that's a big revelation, isn't it? We have a major cycle due here today. It's on a scale of 1 to 10. It's about a 7.5. And so this should be something important happening today. I've mentioned that I think what we're seeing here is nothing more than a dead cat bounce in the stocks here in the U.S. Unfortunately, dead cats can bounce pretty high sometime. So we'll see. Now, the Chinese market is only half of them are open, and they're rallying. Let's just check and see how our FXI opened here to see if it got up to the 43 level. And we got, well, so far we've been to 42.20, which is not too far away. We're still a half a point away, but we'll see if that's the case. This is a big thing that's going on in China, folks. Don't let anybody kid you about it. This is something really serious because these collapsing commodity prices means that they're not making as much stuff, and we know from our own transportation index they're certainly not shipping very much. And when you look at the fact that electrical consumption in China has been dropping for 18 months, some of these factories aren't moving as much stuff as they were before. So that's a lot of stuff. So have a wonderful weekend. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.